And welcome to Q2FY24 conference call for Sharda Cropchem, hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Akshay. Warm welcome to all the participants on the Sharda Cropchem Q2 FY24 conference call. From the management, we have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Dinesh Nahar, GM Finance, and Mr. Jetkin Gupta, Company Secretary on the call. Without further ado, I would like to hand over the call to Mr. Bubna for opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, Mr. Bubna.
Thank you, Manishji. Good afternoon and very warm welcome to everyone present on this call. Along with me, I have Mr. Dinesh Nahar, General Manager Finance, and Mr. Jetkin Gupta, Company Secretary, and SGA, our Investor Relations Advisors. Hope you all have received our investor deck by now. For those who have not, you can view them on the stock exchanges and the company website. As you are aware, we specialize in marketing and distribution of wide range of formulations and active ingredients of agrochemicals. These encompass fungicides, herbicides, insecticides, and biocides, catering to a diverse global customer base. Through its expertise and commitment, the company has established itself as a trusted partner in the agricultural industry worldwide. We prepare comprehensive dossiers and seek registrations in our own name. We allocate substantial resources and establish our foothold in the market. Our total product registrations stood at 2,885 as on 30th of September 2023. Additionally, 1,130 applications for the product registrations globally are at different stages of approval. The capex for H1 FY24 stood at rupees 217 crores. For the full year, we expect a capex of around 400 to 450 crores. We have successfully maintained a strong relationship with third-party manufacturers in China and India, ensuring quality products at optimal prices. Over the years, we have built a customer network in global markets. Additionally, we are benefiting through the economies of scale and leveraging our supply chain to deliver value to our customers. For Q2 FY24, the revenues have degrown from 722 crores to rupees 581 crores. We have seen a volume growth of 19.7% Y-to-Y. Volumes from agrochemicals grew by 18.8% Y-to-Y, whereas volume from non-agrochemicals grew by 30.3% Y-to-Y. Sales have degrown due to lower product price realizations across the globe, across Europe, NAFTA, and Latin regions. Gross margins have reduced to 25.1% in Q2 FY24. The raw material and finished goods sales price have reduced substantially. This has led to stock revaluation as per our accounting policy and has impacted the gross profits and profitability to the tune of rupees 13 crores in Q2 FY24 and rupees 84 crores in FY H124. The company is seeing an improving trend in the second half of the year. With this brief review, I would now like to hand over the call to our General Manager Finance, Mr. Dinesh Nahar, for discussing our financial performances. Thank you very much. Now, hand over to Mr. Dinesh Nahar.
Thank you, sir. Good afternoon, everyone. Coming to Q2 FY24 performance, revenues stood at rupees 581 crores versus rupees 722 crores in Q2 FY23, a degrowth of 20% year-on-year. Coming to the split, agrochemical business degrew by 23% year-on-year to rupees 441 crores, whereas the non-agrochemical business degrew by 4% year-on-year to rupees 140 crores. Gross margin stood at 25.1% in Q2 FY24 as against 27.3% in Q2 FY23. Raw material and finished goods sales prices have reduced substantially. This has led to a stock revaluation as per accounting policy and has impacted the gross profit and profitability to the tune of rupees 13 crores in Q2 FY24. EBITDA stood at rupees 38 crores, which is mainly due to the decline in the gross margin and increased other expenses, which are related to strengthening of global workforce to support future growth. PAT for the quarter stood at negative 28 crores. In the agrochemical space, Europe degrew by 3%, NAFTA region degrew by 42%, LATAM region degrew by 21%, whereas sales in the rest of the world degrew by 40%. Europe contributes 53%, NAFTA 30%, LATAM 11%, and ROW 6% of the agrochemical business for Q2 FY24. In the non-agrochemical space, Europe degrew by 29%, NAFTA region grew by 3%, LATAM region degrew by 20%, and ROW region grew by 13%. Europe contributes 16%, NAFTA 61%, LATAM 6%, and ROW 17% of the non-agrochemical business for Q2 FY24. Now coming to H1 FY24 performance, revenues stood at rupees 1,219 crores versus rupees 1,546 crores in H1 FY24, a degrowth of 21% year-on-year. Coming to the split, agrochemical business degrew by 23% year-on-year to rupees 916 crores, whereas the non-agrochemical business degrew by 15% year-on-year to rupees 303 crores. Gross margin stood at 16.5% in Q2 FY24 as against 26.3% in HY23. Raw material and finished goods sales prices have reduced substantially. This has further led to a stock revaluation as per accounting policy and has impacted the gross profit and profitability to the tune of rupees 84 crores in H1 FY24. EBITDA stood at negative rupees 28 crore, whereas profit after tax for the half year stood at negative 116 crores. In the agrochemical space, Europe degrew by 13%, NAFTA region degrew by 29%, LATAM region degrew by 38%, whereas sales in the rest of the world degrew by 31%. Europe contributed 52%, NAFTA 33%, LATAM 10%, and ROW 5% of the agrochemical business for H1 FY24. In the non-agrochemical space, Europe degrew by 51%, NAFTA region degrew by 14%, LATAM region degrew by 18%, whereas sales in the rest of the world region grew by 56%. Europe contributed 15%, NAFTA 56%, LATAM 6%, ROW 23% of the non-agrochemical business for H1 FY24. Working capital days as on 30th September 2023 stand at 120 days. Thank you. We can now open the floor for the questions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Himanshu Upadhyay. Please go ahead.
Yeah, hi. Good afternoon. I had a simple question. We have seen a volume growth of 18.8% and a fall in revenue of 23%. So should we assume that overall average price fall is something like 40%? And is it what we understand is we are very diversified across the product segment, okay? But if simple calculations I do, it seems that price fall is something like 40%, which I am not able to comprehend. Secondly, we say we are seeing improvement in the second half or expecting improvement. The improvement is on the demand side only, or we are seeing the prices of commodity chemicals also increasing, and hence both the things are improving. So can you elaborate on this question?
Sir, I'd like to break your question into two parts. One, you said if the drop in the prices to the tune of 40%. Yeah. And my answer is yes. There is a substantial drop in the prices of the products. In some products, the prices have fell down to even 30% of their original prices about a year back. Now, the second part is there's an increase in the volume, and will that also impact the prices? My answer is yes, here also. So it's all a question of supply and demand. There was an abundant and excess supply from China, and a lot of products in the pipeline, which led to a sudden crash in the prices and demand. Now, once the demand is improving, and the stocks in the pipeline are getting consumed, there would be some upward swing in the prices, but I don't expect it to be very sharp. It will be very gradual because the stocks available are in abundance. Thank you.
Yeah, and the second question, then I'll join back in the queue. We are seeing inflation a challenge across the globe.
Mr. Himanshu, which company do you represent?
O3 PMS.
I didn't understand.
No, the name of the... Yeah, O3 PMS.
O3?
PMS.
Okay.
Can I ask second question?
Yes, please.
Yeah, see, we are seeing inflation a challenge across the globe, and almost all raw material prices are increasing, okay? But if I see the price of agrochemicals or the overall basket falling by 30-35%, is it that the capacity has expanded substantially for chemicals and hence this price fall is there? Or do you think capacities have not increased? It is just the channel which has so flooded that we are seeing such a price or abnormal price fall?
See, you have to go a little backward and see the background of the general industry. During the corona time, the capacities had got shrunk and the prices had jumped up very substantially. Now, after the COVID situation has got improved, the factories have restarted. Some people have, with enthusiasm, added additional capacities. So the production has increased substantially.
Okay. But are we still seeing the supplies to be in quite excess of demand, or your expectation is that
as on date the supply is sufficiently in excess of the demand?
And hence our assumption is that prices will move very slowly upwards.
Yeah, the movement is expected to be slow.
Okay. Thank you for your reply.
Thank you, Mr. Mansu.
Thank you. The next question is from line of Sri Surya Kalagarla from Poda Diamonds. Please go ahead.
Hi, good afternoon. I can see that our performance in top line from last 3 quarters is decreasing YOY. The margins also going down. We are shifting in losses from last 2 quarters. Earlier it was forex fluctuation. Because of that forex fluctuation, it was decreasing performance. But now we can see the overall performance of the company itself is going. So just wanted to understand, what's the future of the company going ahead? Is this
Sir, your voice is not very clear and the voice is cracking in between.
Am I audible?
Can you please switch to the handset?
Am I audible now?
Now you are audible.
Yeah, I was saying that our performance is decreasing for last 3 quarters in top line. EBITDA margins are
Again, sir, the voice is getting cut in between.
Yeah, hear clearly now.
Yes, this sentence I heard clearly.
Yes, I was saying that from last quarters YOY.
Sorry for the interruption.
No.
Yes, sir, your voice is not audible. Can you please switch to the handset? Can you please switch to the handset?
Yes.
Or get in the queue?
Hello.
Sri Surya sir, please go ahead.
Am I audible now? Can I repeat the question?
Yes, please go ahead.
Yes. I was saying that our top line performance is decreasing from last 3 quarters. Our EBITDA margins are shifting downwards. We are going into losses from last 2 quarters on net losses. Q4 was a fall impacted the company's performance.
No, sir. The voice is not audible.
As the current participant is not audible, we will now move to the next question from Sonal Minhas from Prescient Investment Management. Please go ahead.
Hi sir, this is Sonal Minhas. Am I audible?
Yes, please.
Yes sir, hi. Sir, I wanted to understand the volume growth that we have seen during COVID and right now. During COVID, we saw very negligible volume growth, but the realizations were really going up. Now we are seeing that the volumes are up while the realizations have tanked by around 40%. So in a business where you say you're filing for specialized products, your product niche areas in which you're operating are going up. As an investor, sir, who looks at your business quarter on quarter, how are we supposed to understand and connect the quality of your product vis-a-vis the volume that you basically are growing in? Because if we are filing in Europe, if we are filing for new products in US, and the products are in the niche areas where you have a reasonable presence, there should be some understanding of volume growing over time, sir. So then I am a little handicapped here to understand that if the volume
how am I supposed to understand the volume of this business, given that this is a specialty product that we are actually selling? So just educate us a little, sir, because the vast swing in volumes is very difficult to understand.
Mr. Minhas, you must understand that we still have less than 5% of the total global volume of the business. So at a global level, the scenario may be different, but at an individual level, our scenario is little more brighter than the global level. You understand?
Sir, I appreciate that, and therefore the potential looks bright. But and I understand that for you to give guidance on volume and realization, it is difficult because this is not in your control. But I am questioning the fact that the products that you are filing, the niche areas you are entering, are these defensible? Because, sir, we are public market investors. We have seen products which are into niches and good quality areas. There is either a defense of margins or there is a defense on realization, which we don't see here, sir. So are we missing something in terms of understanding the product, sir, fundamentally? Because such swings don't happen in defensible products, sir.
No, that may be your experience. Our experience is that we are going in the products which are just going off patent, where the competition is very little. And again, after we get the registration, the competition is still very less because of the entry barrier of registrations, which is a very difficult, highly capital intensive and time consuming process. And the innovators still control about 75% of the market, even after the products go off the patent. So we feel that we are on the right track, and if we continue like this, we will continue to grow.
Okay, sir. So if we assume this COVID-related squeeze first did not happen or supply constraint did not happen, and let's say 12 months from here on or 18 months from here on, where all of this is behind us, can we assume more linearity and more predictability in the volume of the business? Just the volume, sir.
I think the volume will increase.
Got it, sir. Thanks a lot. Thanks so much, sir. Thank you, sir.
Thank you. The next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Bhuraji, hi sir. Good evening. Thanks for the opportunity.
Hello, sir.
Sir, first question is on our segmental losses in agrochemicals. So you mentioned definitely roughly 13 crore is attributable to inventory-led losses because of the liquidation of high-cost inventory. However, there is a EBIT loss of 58 crores. So, rest, is it because of the continuous pricing pressure and then we have to sell it at a lower prices, or the scenario will continue, or it is just only high inventory which we had and then we had to sell it and that this loss is over now?
Yeah, unfortunately, this inventory was not created by us and the planning. We had received firm purchase orders from our customers, mainly in North America. We delivered the goods to them, and then the prices started crashing. So the customer said, "You please take back the goods. We will not be able to pay you, and even if you leave it to our godown, you'll have to pay us rent." We were forced to take the goods back, and that added to our inventories. And now those inventories are getting offloaded. We are moving towards the normalcy, and this is what leads us to give us a little bit of optimism about the performance of the company.
So when you say, sir, 13 crore is the inventory losses, it includes that all the goods which you have taken back, including that also?
1 minute, sir. Rohanji, it is mainly the revaluation of the stock, which are in our possession.
Revaluation of the stock, which is already, which is with us only, right?
Yeah, with us, and the prices have shrunk.
So this is basically including primarily the material which we have taken back from the distributors.
Yes, sir. Yes.
Okay. And so there is no commitment from the distributor side, and if the prices fell, even they have taken the material and it was a sold material, we were bound to take it back. Isn't it some
Yes.
kind of breach of the contract or the trade of the terms?
It is a blatant breach of the contract, and we had to go through it.
Just because we want to maintain the relationship with the dealers.
Sir, we had no other choice except to take them to the court of law, which is a very difficult process and not advisable. And it was happening across the industry. Every customer or purchaser has gone back on his commitments and raised his hands up.
Okay. Sir, does it have a sore impact on our relationship or our dealers model with whom we were doing the business? And we have also gained a lot of market share in last 2 years, especially in a European market when the prices were going up and many regional players in Europe was not able to meet the demand, and we gained the market share that actually helped us in post-pandemic environment. So is it that the returns are more from the new traders, new dealers, or with the old relationship it was not visible, or it is across, and how it is going to have impact on our market share going forward?
Ranji, your question has been very long, and it is comprised of many questions. First of all, I was able to get the grasp of the first part of the question, whether it has led to soreness in the relationship. My answer is no. In fact, we have gained a lot of respect and confidence from our customers that we have stood by them and we have helped them to come out of the situation. And it will definitely also increase our customer base. I don't know whether I answered all your questions, or if something remains, please repeat it.
Sir, I was saying that we have gained a lot of market share in post-pandemic era, because when the China prices were going up and material was not available, many of the local European guys could not cater to the market, and we gained the market share. And in that process, we added new dealers. So, is the return is more from the new dealers which we have added in last 2 years, or it is across?
Very difficult to distinguish. We have in general received more respect from most of our dealers and customers, that we are a company which is able to support them in a tough time.
Okay. So just next question, and I'll come back in queue after that. Sir, we have shown a very solid volume growth. However, we have seen that there is a huge inventory destocking going on. So in that kind of scenario, how you were able to push the inventories in the market? I mean, how we could report this kind of volume growth, and what territory?
So this is a very difficult question to answer, but the customers have approached us, we approach the customers, and that bought the goods from us.
Sir, it may be like that because you were taking the materials back. So all the high cost inventory they have given you back and then repurchase the item at a lower price, right?
Yes, sir. And in some instances, they say the inventory can stay with us, but you give us a discount from the sale price to prevailing market price. And we've also complied with that request of them. So physically, some inventories have not come back to us, but we have given them a credit note or discount.
Okay. So in terms of volume growth and the kind of margin which we have seen in first half, how do you see that the recovery in second half, more importantly in terms of margins? Is this high cost inventory liquidation and impact on the profitability and higher discounts asked by the dealers, all that is over, or there is still some pressure on margin front in second half?
Sir, the customers are also aware what are the prevailing prices at the source, which is China. It's a very transparent system. So we have to also live within those constraints And if somebody was selling at $100 and if I'm earning 25% margin, then the gross profit for me was $25. But if the same product is being sold at $30 and I'm earning 25% margin still, then my gain is only $7.50. So this is making a big impact, and that's why I would say that there would be a very slow improvement on the profitability.
So you're saying that even if the percentage margin may come back to 25-30 at absolute level with a fall in 30 to 40% realization, absolute EBITDA or absolute gross profit will be significantly under pressure even in the second half or maybe even next year as well?
I would say in the second half. I don't want to make a guess. With your guess in the next year, I would say in second half, yes.
Okay. Sir, I'll come back and you for further questions. Thank you.
Thank you.
Thank you. The next question is from the line of Resham Jain from DSP Asset Manager. Please go ahead.
Yeah, hi. Good evening, sir. Am I audible clearly?
Yes, you are very much audible.
Yeah. Good evening, sir. So, sir, I have three questions. First question is, typically we have seen general behavior of a distributor whenever prices are falling, they hold up their purchases, and reverse is also true. When prices goes up, demand suddenly goes up. So at this point of time, obviously prices have come down, but what are your experiences, let's say, of the past, whenever this kind of situation has occurred in the past?
Reshamji, this kind of situation has not occurred in the past. This is a very unique situation which we feel is in the history of our company's existence, that the prices have dropped and crashed so severely and so quickly. And I do not think that such unique things happen very often.
Understood, sir. Very clear. So second question is, as you clearly mentioned that this kind of situation were unique, and since Sharda has a very strong balance sheet, it could sustain all the kind of losses and maybe even could sustain even more quarters. But a lot of smaller marginal players who might be present in this market, even some of the larger companies are facing a kind of balance sheet related issues and all. Are you seeing any consolidation happening at the smaller? Obviously, there are very few smaller players present, but any consolidation in the marketplace?
Reshamji, we have no active role in these things. So whatever I say would be just a guess. We don't spend much time on what is happening with these smaller players. It could happen. My answer to you is that it could happen, or it may not happen.
Okay, understood, sir. That is also clear. Sir, lastly, this is not a financial question, but generally an observation. Over the last 3-4 years, what we have seen is that there have been a multiple changes in the CFOs at the company. Since FY, let's say, 18-19, there are like 3-4 CFOs which got changed, and at a very short interval. And CFO as a designation for a listed company is a very important role, especially. So, any thoughts there? How do you see this with the new selection of a new CFO selection over there?
Mr. Resham, we are talking about human beings. Human beings have the same nature, but what I can tell you is that everybody who has come and gone, he has gone with a very big prospectus. So he finds that his tenure in Sharda proves lucky to him, and he gets a better opportunity, better offers, which we are also happy that people are prospering. But we have not forced, we have not created any situation for any CFO to quit our company. We have been able to make the best use of whichever CFO has joined us, and he has helped us to grow the company.
Okay, sir. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Darshita from Antique Stock Broking. Please go ahead.
Yeah, thank you. Good afternoon, Bhuvnaji. Thank you for the opportunity.
Darshita ma'am, your voice is not audible. Can you please switch to the headset?
Is it better now?
Yes,
slightly better, but needs to be still better, madam.
Is it better now?
Yes.
Yeah. So my first question was regarding the prices. I wanted to understand how the prices are moving currently. I mean, do we expect any stock evaluation taking place in the second half of the year as well, or have you already taken the impact of it in the first half itself?
Madam, we have taken care of we did some stock revaluation also in the first quarter, assuming that would be the end of the thing, but it did not happen. We have again did the revaluation. The impact has been much smaller than the first quarter, and we feel that right now there is not much of a scope for further prices going down and our necessity to do any stock revaluation in the third or fourth quarter.
Okay. Thank you. That's helpful. Very clear. The second question was regarding our competition in the regions where we largely operate in, that is Europe and NAFTA, would be MNCs and also a few Chinese players. So when we say that China has been dumping the inventory in the market, what is the kind of discount at which they are dumping as compared to what we are selling at?
Madam, I would not call it as dumping. They are making goods available at the prices, and if they are not able to sell it, they reduce the prices on their own. And this is happening right at the source. If some customer goes with them and presses them for some further reduction, considering their own situation, they comply with that. They are also suffering. They are not very happy. Many of them have closed their manufacturing plants and sitting on an inventory, and they are also losing very heavily because they have bought the raw materials at a higher level, and now they are forced to sell at a loss.
Right.
They are not very happy to do that. They are not doing it willingly, but if they have to stay in business, then they have to do these things.
Right. So does a scenario like this result in a market share loss for us of any kind?
Market share loss, no. Not for us.
All right. Okay.
Because of the entry barrier of registrations, the Chinese players can play any role within China or outside the territories where goods are selling. Inside the territories, the scenario is different. They cannot go and dump anything into any country without registration.
Right. And just one last thing on the pricing. I mean, if we look at you mentioned that there is almost a 40% decline on realization during the quarter. If we look at that number, it looks like the prices are way below the pre-COVID levels also. I mean, if we compare that to your FY21 realization number versus right now, it looks like the prices are below pre-COVID levels, significantly below pre-COVID levels. So, are we not expecting any jump? At least, the prices coming back to the mean level, if not going above that, or at least reaching the pre-COVID levels?
Madam, I have not understood your question very well, but I only understood your remark that the prices have gone down to a pre-COVID level. The answer is yes. And now, a lot of manufacturers are sitting with high quantity of inventories, and they are also they also need cash flow. So in the need of their needs, they are trying to increase the price, but then again they have to also see there should be customers who will buy them at that higher price. So it's a very open, transparent question of supply and demand.
Right. And the on-ground demand...
Supply is still there. Excess is there.
Excessively there. Got it. And the on-ground demand continues to be strong on farmer level?
Farmer level, yes. Farmer level, because if you have, I'm sure you are doing these studies also. The agricultural productions have not gone down. The demand of agri products have not gone down.
Right.
And even in countries like Ukraine, I would like to let you know that the agricultural activity is fairly normal. We are selling to Ukraine, and our sale to Ukraine during the war time has been slightly higher than the previous year. And they are paying.
Right. Got it. And just two data-related questions. If you could give us the agrochemical volume, region-wise agrochemical volume.
Yes, 1 minute. Yes, region-wise agrochemical volume. In Europe, it is 3.6 million, LATAM 0.8 million, NAFTA 2.6 million, rest of the world 0.5 million.
Okay, and the gross margins region-wise?
Gross margin, 1 minute. Gross margin, Europe 34%, LATAM 28%, NAFTA 5%, rest of the world 45%. So NAFTA has been the biggest affected region, and that constitutes also a substantial part of our business.
Right. And could you give the the distribution between volume, price, and exchange? I just want to understand if there was any exchange benefit.
Madam, your question got blurred.
Volume, price, and exchange. Volume, price, and exchange for the different. The distribution of volume, price, and exchange.
Volume has grown. This is globally, no? Volume has grown by 20%. Foreign exchange impact has been about 5%. Price and product mix is minus 45%. And total growth is minus 19.5%.
Got it. Thank you so much, sir. I'll get back in the queue. Thank you.
Thank you, madam.
Thank you. The next question is from the line of Dhruv Muchal from HDFC AMC. Please go ahead.
Yes, sir. Thank you so much. Sir, what was the sales reversal that we would have booked in 2Q?
Q2.
Yeah.
1 minute. Sales reversal in Q2 has been in the range of about 70 crores.
Okay. And sir, when you give this volume, price, and FX split, where does the sales reversal come in? Is it negative on volumes, or where does it fit in?
It fits into the volume growth.
Okay. So had the sales reversal not been there, your volume growth would have been this whatever percentage higher. That is the right way to think of.
Yes.
Okay. Sure, sir. And so your inventory, even in at the end of 2Q, still seems a bit high in number of days. If I compare it versus the history for the 2Q period, it is still a bit high. So is there any worrying sign still that the inventory that we carry, can still create some pressure?
See, this is a result of all those reversals that we had to do and collecting the goods back from our customers. But that process has more or less dried up now. So the inventories will get consumed in the next quarter.
Okay. And all these inventories are mark to market to the current technical prices. So there is no further loss that can come on these inventories.
No, it's mark to market.
And so, one thing you mentioned about these US, distributors of yours returning goods and
loudly.
So your US distributors returning these goods because of the pricing impact. Is the same situation also in Europe, or Europe is adhering to the commitments? I'm just trying to understand the intensity.
In Europe, it is not. It's very insignificant. In Europe, they only request for extension of the payment terms or some small discount, but not be so much blunt. In US, it has been the other way.
And so in US, what we see, is it specific to some molecules that we had some exposure to, and hence the impact is large, or it is across many technicals?
I would say across. It again depends from molecule to molecule. If some molecules productions have gone up and the demand has been normal, then the drop has been very significant. In some molecules, it's not so bad.
So because when we see the data, whatever data we get, it seems the price impact and volume impact for US is mainly in glyphosate and probably some other herbicides. So I'm just trying to understand, is this very particular to specific molecules, or, as you said, it is across many molecules?
Mr. Dhruv, glyphosate is known to be a very volatile product and the biggest product in the agrochemical business. So even in the normal cases, the fluctuations in glyphosate has been more eminent, more obvious. Other products, there are many other products which has faced this thing, and it is not glyphosate. They are non-glyphosate.
Okay. So it's not only glyphosate, it is others.
Glufosinate ammonium, which is having similar applications of glyphosate. That product has seen a very big drop this year in prices.
Got it. And sir, one last thing is probably two things, sir. You mentioned that in enthusiasm, a lot of Chinese have set up new capacities also. So, is there a significant increase in new capacities in China based on whatever your ground checks are saying? I mean, say for example, I'm not sure how you put it, but some qualitative comments there will be helpful, sir. What is the quantum of capacities that have come? What is the new supply that has come up in China?
Sir, I was there in China about 3 months back. There's an exhibition, and I'm also going to China tonight for another exhibition, which are annual. Last time when the manufacturers came, they said they shut down their plants. One manufacturer said he said that they had 7 plants, and they shut down 4 of them because they cannot afford to run them. So now I think the situations are getting more normalized. The shutting down process may not be so abrupt, but I get the feedback from when we talk to them and we communicate with them that they're still sitting with a lot of inventory.
Okay.
Nobody is daring to put up a new plant.
So they already put it, seems so many.
Yeah.
So yeah. So last question.
The biggest problem would be to restart the plants that they shut down if the demand goes up, which is not happening so far.
And so last question is, sir, any guidance you can give for sales growth for the full year this year and the EBITDA growth, that EBITDA margin probably that you're expecting, or just for 2H, what is the growth that you're expecting in EBITDA margin?
I think we'll have to wait and watch the situation. If I'm going to give you something, this is going to be a guess, which I prefer to avoid.
Sure, sir, no worries. Thank you so much, sir, and all the best. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. The next question is from the line of Vishnu Kumar from Avendus Spark. Please go ahead.
Hello. Thanks for your time, sir. Over the conversation, you mentioned high inventories across manufacturers, China, and also in the end market. So when we look at over the next 2 quarters to 4 quarters or 12 months or so, how are we thinking in terms of planning our inventory, how purchases, or when do you think the situation, in your opinion, will normalize? Because you also said this is a unique case, and so when we are really getting into the market, how are you thinking the market will change?
Mr. Vishnu Kumar, this process is very simple for us. And one of the reasons for it being so simple for us is that we are very nimble-footed. We are not manufacturing. So we very easily can switch from one product to the other product without any botheration of any restrictions at all. Most of our planning is guided by the discussions which we have with our distributors, our customers, consumers. And they give us a feedback at this season, this product is likely to, and then we plan to source them. We are not planning so much in advance that this thing will happen. We always get a feedback from our customers, and then we do the planning.
Understood, sir. So current feedback that you have, at least when do you think this excess inventory situation will normalize? At least whatever feedback you have on an industry, or more. This is more from an industry question. Trying to understand when this excess inventory will probably change, in your opinion.
See, some customers who must have bought 10 containers from us are asking for only 2 containers now. But they are asking for some product quantity. So this gives us an indication that earlier it was out of excitement, out of greed, and now they are being more practical.
Understood.
The question we are presuming at least the end-level customers, distributors, they are not speculative. You understand? Chinese are obviously not speculative because they're already suffering with the inventories. So this gives us an impression that slowly the things will come back to reason and normality and logic.
Got it. Just a timeline, if you have anything that you think will change. This finally what you said. If there is any timeline you think it will improve.
I have already said that this is moving towards normality, and the speed is not very big. Speed is normal or less than normal.
Understood. Sir, first off is most
Sorry for the interruption. Vishnu sir, may we request you to return to the question, please? Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So my first question is again harping on China. So what is your assessment from Q1 to Q2 in terms of the supplies coming from China and the pricing of products? I mean, how it has changed on a QOQ basis? Your thoughts on that. Thank you.
Mr. Nagraj, this depends from product to product. You cannot generalize it. In some product there is an excess capacity or excess stocks, the normalizing process is very slow. Some products it is getting faster. That's the only thing I can say. It's very difficult to generalize.
Sure, sir. That is helpful. So second question is in terms of weather-related challenges in any of the geographies. Are we seeing it across any geographies and for particularly some crops in those geographies? Thank you.
Sir, those things are also the fact and reality. In some European territories, the weather has not been so good, and our customers and distributors are sitting with the unsold stock. But this has not been the case. You cannot generalize it.
Sure.
It is happening in some pockets of the Europe, some pockets of also US.
Right. Thank you so much, sir, and best of luck.
Thank you.
Thank you. The next question is from the line of Anuj Sharma from M3. Please go ahead.
Yeah, thank you for this opportunity. So two questions. One is, our model has been challenged for the first time, as you.
Sorry for the interruption. Anuj sir, can you please come closer to the handset?
Yeah, I am on the handset actually. Is my voice audible?
Yes, please go ahead.
Yeah, so I was saying that our model has been challenged for the first time, considering the price falls. Do you intend to have any changes to the model, or what are the key changes you will bring about after this price falls?
See, Mr. Anuj, we don't see any reason to change our model because of this. We feel that this model is the most flexible one, and we would like to continue with that.
Okay. Just in terms of how do you deal with your customers, any changes, or this is part of the trade, the rejection of goods. Anything you can think about in that, or that's part of the trade?
I think it's a part of the game, and this does not happen very often. As I've told some of your colleagues, that we are facing this for the first time in the history of our company. I don't think these things are they are going to be normal or usual.
Okay. My second question is on the non-agrochemical segment. Now, behavior also in terms of pricing seems to mimic the agrochemical segment. Now, I understand these were more manufacturing-oriented stuff. So how is the pricing so much varying in the non-agri segment, especially in Europe?
The variation has not been too much. And for your information, many of our non-agro products are giving us better margins than the agro products at this point of time. The only factors which were affecting the non-agrochemical business were the logistics cost, the transportation cost, which became very significant, and transportation had increased more than 10 to 12 times. Those prices, the freight and transportation costs are coming down, but we are non-agro business is made to order. It's not keeping inventory and then selling. So the inventory problem has not been very severe in non-agro.
Okay. When I look at your slides, it seems to indicate the pricing fall in even non-agro in the first half is more than 20%. And I was wondering how does that function?
Mr. Anuj, that price includes the cost of freight.
Okay.
And the freight has come down from, say, $100 to $10 now, back to the pre-COVID times.
Okay. All right. Thank you. That answers my question.
Thank you, sir.
Thank you. The next question is from the line of Siddharth Gadekar from Equaris. Please go ahead.
Hi, sir. So my question is specifically to the North American market. So where we have seen a significant drop in our gross margins. Can you just highlight that how much is the contribution from glyphosate and glufosinate to the overall drop? One, and secondly, in terms of the end demand, are we still seeing inventory built up there, or are things likely to go back to normal in the next 2-3 quarters?
Sir, your voice was getting cut in between for the first part. So can you repeat the question once again? And
so in North,
a little louder, and speed should be a little slow.
So in North America specifically, we have seen a sharp drop in our gross margins. How much of that would you attribute to glyphosate and glufosinate? One. Secondly, in terms of the inventory levels in glyphosate and glufosinate, is there still a significant amount of inventory built up even for CY24? How should we look at it?
Sir, now I'll answer your question. Glyphosate forms a very small part of our total business. Glufosinate, yes, but most of the inventories have been taken care of. Nobody is sitting with a significant inventory. In fact, we are buying something for our new requirements at a price which is about 20% of the original prices that we paid, and selling it with about same margins that we are earning, but the absolute margins are much lesser.
So is it fair to assume glufosinate is still below $10, and even for the third quarter we are not seeing any recovery in those prices?
You are very intelligent and you know all the things. Yes, you're right. Glufosinate selling at $10, less than $10, which was otherwise selling at $45.
Okay, sir. And in terms of cost of production, you will have any sense what would be the cost of production in glufosinate, or that we can get a sense that when can we see recovery?
With that, how does it help us? We can get into a lot of details, but it doesn't help us. We have a lot of better things to do. Look at our business than looking at the manufacturer's business. Manufacturer is crying. Manufacturer is very unhappy with these prices. He is forced to sell it at these prices because he also needs some cash flow.
Okay, sir, got it.
What is his raw material prices now and at that time? That's a very long thing for us to go, which is not necessary for us.
Okay, sir. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Dhruv Muchal from HDFC AMC. Please go ahead. Hello? Hello?
Sir, only I can hear you. Probably he is not able to hear you.
Hello? Hello?
I think he must have put it off.
Hello, sir?
Something like that.
Hello? Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to management for closing comment.
Thank you everyone for joining us. I hope we've been able to answer all your queries. We look forward to such interactions in future. We hope to meet your expectations in the future too. In case you require any further details, you may contact us or Mr. Devan Dhruva from SGA, our investment relations advisors. Thank you once again and have a nice evening.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
इसमें बंदा था कितना अभी आया लास्ट में कितना तो उसका आया लास्ट में जो बंदा है ना वो सिद्धार्थ करके जो अभी आया था ना बहुत जोर से बोल रहा था वो प्रोडक्ट